Know the difference with Annex Wealth Management. If you are a self-employed professional, there are advanced tax strategies you might be interested in, and we're going to discuss them with Tanya Sinha, CPA and Manager of Tax Planning at Annex Wealth Management. Welcome back, Tanya.
Thank you, Danny.
Going to point out right at the top, there is a big difference between tax preparation and tax planning. Tax planning is what we do at Annex, and Tanya is a big part of that. Let's get going. Why is it important to establish the right entity and tax election for your business?
Very good question, Danny. We work a lot with self-employed people. Selecting right entity is crucial for any tax planning. It also leads to conversations regarding income shifting and maximizing business deductions. Few commonly seen entity selections are S Corp, C Corp, LLC, LLP, and simply sole proprietorship. Generally, when an individual starts getting into a business, they start with sole proprietorship if they have no employees. Once business starts to pick up, choosing the right business structure is crucial. It will significantly influence taxation, personal liability, and business management. In most cases, when you are making more than $80,000 to $90,000 a year, opting for an S corporation will yield significant tax savings, as owner can pay Social Security and Medicare taxes solely on their tax salaries rather than the entire business profits. And that's when we come in play. When a person's business has kicked in and they are making certain amount of gross profits, we analyze whether they should stay as sole proprietor or whether they should switch to S Corp.
Would individuals aspire to get to S Corp? It sounds like there's a lot of great stuff that comes along with it.
Well, when we show them the numbers, when we show them how much they can save in taxes, they definitely go in for it.
Self-employed people are busy, but they need to maximize retirement accounts. What's the game plan there? Is that where you, as manager of tax planning at Annex, work with wealth managers with our clients?
Retirement contributions are a great saving strategy, offering a twofold benefit of securing financial stability in the future while reducing current tax liabilities. The most popular retirement plans are SEP IRAs, Simple IRAs, Solo 401ks, 401k Safe Harbor, Profit Sharing Plan, Cash Balance Plans. These are the most popular ones, but there are other options available. By contributing to these plans, entrepreneurs can deduct their contributions from their taxable income, dramatically lowering their overall tax burden. Let's say we have John, who is 55 years old, real estate agent, making $285,000 per year after expenses. And those expenses also includes his payroll salary of $125,000. And we are assuming he is running as an S Corp. With a 401k by itself, he could contribute $30,000 from his wages as an employee and $43,500 as an employer for the year, to a total of $72,500.
Hello, pretty good.
Exactly. And if he adds a cash balance plan to his 401k, he can contribute another $100 to $200K to his retirement plan and can defer that income for the year.
John might be in pretty good shape. Right. We're with Tanya Sinha, CPA and Manager of Tax Planning at Annex Wealth Management, talking about tax planning for self-employed folks. This tip is really impressive. Tell me how this works. Pay your children and your spouse?
As an S Corp owner, employing family members comes with various advantages. Adding your spouse to the payroll can increase fringe benefits with contributions to Social Security, boosting retirement benefits. Setting up a 401k plan for your spouse can further enhance the family's retirement fund. Additionally, employing your children can decrease family taxes, decrease deductible business expenses, and help initiation of a retirement plan for them. Let's say you pay your kid $20,000 for a year. You can deduct full $20,000 as your business expense. And since standard deduction for the year is $13,850, your kid now has to pay taxes on little over $6,000. So you have tax savings of about $13K right now. I am excluding the FICA taxes for now, just to simplify it. Plus now, your kid can contribute to a retirement plan, both to qualified and non-qualified plans.
This is a huge topic. If somebody listening right now is self-employed, but they want to improve their tax situation, what is the way that they'd engage Annex Wealth Management?
Great question, Danny. So what I would do is we are going to sit down with them. We will talk about when did you start your business? What does the business looks like? I would like to see their profit and loss statement, balance sheet, how much profit are they making? What is their goal with the business? How long are they planning to stay in the business? Do they have employees? Are they planning to hire some employees? So with that, we will first help them establish this entity. What kind of entity? Like I said, S Corp is gaining a lot of attraction these days because of once you take salary, there is a lot of potential for saving self-employment taxes by converting into S Corp. We also talk about retirement plans. If we are employee, we know all 401k, everybody knows about it. You can contribute to 401k, but when you are self-employed, we want to also talk about, do you want to set up a retirement plan for your employees if you have one? We also want to talk about health insurance. So those are the plans we talk about because health insurance and retirement contribution for your employees, they are deductible business expenses to you. But at the same time, they can help you attract and retain talent.
Tax prep is one thing. Year-round tax planning is another. That's what we do for clients at Annex Wealth Management. Tanya Sinha, CPA and Manager of Tax Planning at Annex Wealth Management. Thank you for your guidance.
Thank you, Danny, for having me.